Have you ever wondered how high Rune could go in 2025's upcoming bull market? Well, you're in luck because today we're going to be taking a look at my Rune price prediction for 2025, where I'll be sharing my thoughts and opinions as to where I think the price action is going. As I get into today's video, if you do find it useful and informative, smash the like button. If you're new to the channel, subscribe, and let's go ahead and jump down into the charts and take a look at what's going on with Rune. Okay, guys, so here we have Rune paired up with USDT. We're on the 1-day Binance chart. Now, we're going to use a couple of tools here to help us understand what happened previously in terms of buying and selling and what is potentially going to unfold in 2025. Okay, so for this, we're going to use a couple of tools. We're going to use the Fibonacci retracement tools. Okay, this is directly built into TradingView. It's probably one of the most widely used and recognized tools in all technical analysis. If you're not using this, I think you're missing a trick myself. So this particular tool is great because it allows you to see where the market reacts to things. Okay, so if you were to draw this on the chart, hypothetically right here between the peak of the previous bullish market and the low of what we've got on the chart here, okay, and we just push this across, we can see how the price action reacts to certain levels on the Fibonacci sequencing chart here. So you can see here that it dropped down to the 618, it bounced, it lost it, but bounced from the 50% level. You can see it's reacting to the 882 area. Just here you can see it quite clearly. You can also see it's reacting to the 382 at this level, and it's reacting to the 236 at this level as well, which happens to be where our bear market low actually formed right there as well in 2023, right? So this is a very important tool. Now, for clarity, these are the settings that I am using, so you can pause the video there if you want to take a look at it. Essentially, we've got 0, 0.236, 0.382, 0.5, 0.618, 0.786, 1. Those are the standard levels between 0 and 1 that come with the Fibonacci chart. We then have a couple of additional ones. We've got the 0.702 and the 0.882. I use those in conjunction with Elliott wave. We'll talk more about that in a moment. 702 is a Bitcoin level, though. Bitcoin loves the 702 retracement, so we keep that on the chart. And then we've got the extensions. The extensions are 1.236, 1.382, and 1.618. Everything else is turned off. If you usually have a few of these turned on, you just untick them. These are the only ones that are really that important, in my humble opinion. As I zoom down here, though, there is a tick box at the bottom here that says fib levels based on log scale. I have to have that ticked on. If I do not, you can see the fib chart here. If I untick it, the numbers are changing. The reason for this is that my chart is in a logarithmic style, and therefore I must make sure that my fib levels are based on logarithmic style as well. Okay, if I don't, you can see here that if I turn off the logarithmic style chart, it looks very, very different, right? Very difficult to kind of read exactly what's going on there from the price action. Okay, so to make it easier, we put on logarithmic, and for the case of auto here to get it into view, you can see it reacts very, very differently. Okay, so that's the first tool that we're going to use, right? The Fibonacci retracement tool. The second tool, which I kind of spoke about there briefly, was Elliott wave. Now, Elliott wave is a fantastic tool at being able to predict out the future because it bases all of the wave structures on the behavior of the people buying and the people selling. Okay, essentially, to keep this nice and simple for today's video, Elliott wave is broken up into either 3 wave structures or 5 wave structures. There's a few different variations of each of them, but they do mean different things. A 3-wave correction like this would be deemed corrective. It goes in either direction. They call this a zigzag pattern. You can have a zigzag, you can have an inverted zigzag. For the most part, we just say ABC. It keeps it nice and easy. It goes in both directions, and they are corrective, as in they're short term, they're not a trend. Okay, you have a 5-wave pattern like this one. This is an impulsive 5-wave pattern, and this is a trend. Okay, the main differences here are the lengths of which the waves go. For example, wave 3 is a very big impulsive move to the upside, hence the name, right? Okay, now there's a few different variations of 5-wave moves. There's actually quite a few of them, but for the most part, we'll kind of walk you through what I'm seeing inside the chart. So those are the 2 tools. We're basically going to be looking at the people buying and selling Rune, okay, and we're going to be taking a look at that behavior, and assuming that we see specific kind of behavior traits, we can predict out where the future is going. And I can already see just by glancing at the chart that this looks like a very promising chart. Okay, so let's go ahead and start off with what happened here in the previous bullish market. Okay, so to understand the people who were buying and selling during this period and see whether they are repeating themselves in the current bullish market. Okay, so for the most part, we have a low point down here at 32.2, and we have a high point up here coming in at a bull market peak at 21.28. Okay, so a pretty lucrative bull market here in 2020 through to 2021. Right now, this might not be all of the data. This actually runs from September 2020 up to May of 2021, and it was a 6,500% move. Now, there might have been more bullish movements. We do know that the kind of low points in 2020 were March, so maybe there was another move to the upside. But this is the data that we have on Binance. Okay, so a really strong move to the upside. Now, this move to the upside looks very impulsive in the way that it went. And now we know this, and we can see this through the initial kind of structures. There's not a lot of overlap, right? When you have a three-wave corrective overlap like this, okay, you can see that it's short in the way, short-term in the way that it moves. And you can see that when you start reversing, you have overlap that gets created. The overlap tells us that it is a short-term movement, not a long-term movement. And when you have these bigger kind of runs to the upside, there's no overlap in them, right? You can see that they're very explosive in the way that they've moved to the upside. Okay, so we can already see here that all of the corrections are overlapping each other, but the kind of breakouts are not. They're kind of really giving you strength in the movements to the upside. So very explosive and very much a trend-based move to the upside. This is critically important for understanding where the future is going to go for Rune. Okay, now let me find some empty space here. This is going to be, I did put together a whole course on Elliott Wave, right? It's over at 𝗕𝗘𝗪𝗏𝗏𝗏𝗏𝗏. I usually link it in the description below. It's well worth checking it out. But to kind of keep this nice and simple, when you have a 5-wave move like this, very explosive 5-wave move, you can't have 5 waves on their own, okay? 5-wave patterns have to be minimum would be paired up with each other. Okay, so you'd have an additional 5-wave move coming out of that, okay, and it'd be a 3-wave correction in the middle. Okay, this is the internal workings of an ABC structure, a zigzag pattern. A up, B down, C up. Okay, the internal workings are 5 waves up, 3 waves down, 5 waves up. Okay. Like I say, check the course out if you really want to understand it in more detail, but it's really important because this here is a 5-wave move, which means we must be expecting a 5-wave move later, right? Very, very important. Now, the corrective patterns, and you can see this on the way to the downside in a bear market, we create a lot of overlap, right? We don't have these kind of really big kind of non-overlapping structures appearing. Instead, we have these very corrective structures. We have a move to the downside, we move up, we move down, we move up again, creating overlap. We move down, we create up, we create overlap. Okay, so you can see here, right, this initial move down, okay, very important. We then bounce, we move down, we bounce, we move down, and we bounce, right? And these bounces, you can see here losing that 200 EMA as well. This one here overlaps this one here. That tells us that this is not a big correction to the downside. Okay, and this is actually a very interesting point because the bull market peaked over here for many altcoins, but not Rune, right? So we have a peak here, not here. Not all altcoins will go together or will peak together, and I'll probably do some videos specifically on timing the market as well. So do watch out for those. But here we have a very corrective pattern to the downside. Okay, it looks like a 3-wave pattern, but it's actually not. It's a W, X, Y, and X, and Z. Okay, so very corrective. Move down here, we bounce up. Again, the bounce to the upside is a corrective 3-wave pattern. You can see that it just lacks that kind of move to the upside. Actually, what we'd call a truncated move because it fell short of its target. It was a 5-wave structure. You have 1, 2, 3, 4, and 5 right inside there, and it fell short of its target. In the same way that you see here, you have 1, 2, 3, 4, overextended 5. Okay, and so you have your zigzag. You have your A, you have your B, you have your C. Okay, so very interesting corrective pattern to the upside. So no trend, so we lost the trend and we turned to corrective. We obviously course, so we continue this all the way down into a bear market low point. And now during the kind of the bear market was very interesting for many altcoins, including Rune here. You see these bigger kind of impulsive moves eventually coming to the downside. Again, very corrective in the way that it actually moved. And you can see that we have here what would be called a just find it. Yeah, double. It's a double-double. So double-double zigzags. Don't normally typically find that. There's no real terminology for it. But essentially what you've got going on is you've got W, X, and Y, okay? And then you've got another W, X, and Y pattern. A lot of people in the bear market were thinking that the bear market was going to be super short and it would be over, I think it was June. Yeah, June 2022. That was not the case because of the patterns that we're seeing here. You can't just have a 5-wave pattern to the downside without it kind of doing anything else. And here you can see that final that final zigzag pattern coming in here as well. So we actually do have a bear market low point for Rune coming in down here, and I'll zoom right in, make sure I get that on the correct wick. Actually, I don't think I have. It's that one there. So that is a low coming in here at 77.7 cents. Okay, so we've had a really strong bullish market, 6,500% move to the upside. We had a very corrective and choppy move to the downside. Okay, coming in on the lows here of June 2023, with pretty much most other altcoins that didn't bottom out in June 2022. They bottomed out either June or October 2023. Then, of course, you see very explosive trend-based moves back to the upside. Let's go ahead and take a look at what they look like, right? So in here, we see very much minimal overlap on the big moves to the upside. So the behaviors are very much what we saw previously with these kind of big breakout situations going on in 2021. We can see them happening here in 2023. Okay, and you've got the corrections kind of happening in the middle. Now this is interesting right here, okay, because this is what they call a diagonal pattern. Okay, now diagonal patterns are very interesting structures. Okay, this one here looks to me like it's either leading. I don't know, it can't necessarily be leading. We'll go ahead and do the due diligence, but it's very, very interesting. So yeah, it's oh, it's just, and it's very, very just. So basically, it's actually expanding, but it's right on the line. Essentially, what you've got is you've got a wave 1, a wave 2, a wave 3, a wave 4, and a wave 5. Now, in this particular instance, and why we call this a expanding diagonal, is that it expands out over time, okay, like so. And you can see that if I snap this in, it looks like this. Okay, we know it's a diagonal-based pattern because of its position. We also know how the correction that fell after it and what that meant. Now, with this particular structure, very, very interesting one, is that the wave 5 has to be the longest wave. And it looked to me like it was just on the line of being bigger than wave 3. So, you know, really, really close to it. Now, obviously, the Elliott wave can be complex. It's quite difficult to kind of see these things, but very interesting structure there. And it leads us into this big explosive move to the upside before finally finishing up here. Now, when we take a look at it, we actually have this one here as well. We have a very explosive move coming up, okay, with this kind of diagonal pattern here, correction in, bam, bam, bam. We hit that. So let me draw that in with a 5-wave pattern. So you have your 1, you have your 2, you have your 3, your 4, and your 5. Okay, but all of that is actually just a wave 3 because you've got this explosive move here. Now, I think this is an overextension. Okay, so you have kind of like a wave 1, 2, 3, 4. I mean, maybe not. Maybe there's actually a really small wave 4. I can see it there. So I thought it was an overextension, but it's not. You have a wave 1, you have a wave 2, you have your 3, your 4, your 5. Okay, so you have a wave 1, a wave 2, a wave 3, a wave 4 coming down here, and then finally finish off with a wave 5 to the upside. 1, 2, 3, 4, and 5. So let's come up to our drawing board here, right? We have a 5-wave pattern. Inside your 5-wave pattern, you have a 5-wave move, like so. You have a 3-wave correction to the downside, followed by another 5-wave move to the upside, followed by another 5-wave move to the upside. Okay, this is known as a 5-3-5. 3-5. Okay, so unlike a zigzag pattern where you only have 2 5-wave moves, in the impulsive breakout situation like this, you have a 5-3-5-3-5 structure. So lots of really big impulsive movements. Great to see. Let's zoom out of that. And you can see that this is the beginning of something really, really powerful. Now, because we had a 5-wave structure here, okay, this 5-wave structure isn't the end of the pattern. And there's a reason for that, okay? Because when it comes to a 5-wave pattern straight off the bat like we saw over this side, the minimum expectation is double top, as in it has to reach at least 21.24, right? Sorry, $21.28, right? That's the minimum expectation. So we could potentially be looking at a big wave 1 with a correction for a wave 2 and look for a very explosive wave 3. Now, this is where things get a little bit tricky because Elliott wave tells us that there's lots of different potential scenarios. We try to go and lean on the most probable, but we can't always be right, right? So Elliott wave is, I like to think of it like blockchain. It's kind of immutable. It's got a rule for everything, right? That every single structure has to be explained through one of the wave counts that are there, which means that it's never wrong. But when the Elliott wave goes wrong, the analyst is the one who kind of gets it wrong because there's so much to remember. There's so much to kind of deal with that sometimes you don't get it right. And this is going to be one of those instances where I think this is a 5-wave move to the upside, but this particular pattern tells me that actually this might not be the 5-wave pattern that we think it is. And it might actually be a zigzag pattern. Okay, so I'm going to go back and just reflect on that a second here and to see whether or not we can argue that maybe there's a 5-wave, that maybe there is a corrective pattern in the middle of it. I just can't see it. You know, I'm looking at it and I just can't necessarily see, unless there's something here. And it doesn't look like it to me. Like, it's quite a tough one. I don't think that's the case, but I'm going to run on the premise based on what's currently happening here. I'm going to give you conservative targets, okay? Because the most bullish targets are going to be really insane. So I'll give you both. But I will lean more heavily on conservative rather than kind of like moon boy targets, okay? It is quite hard to place this, and maybe there's just because I'm not seeing the other data, because it's possible that maybe what we've got going on here is actually like some kind of A, B, and C structure, and I just can't see this data that maybe just doesn't exist because of the charts that I'm on, okay? So it's possible that that's what's going on. So we'll kind of lean heavily on conservative targets, but I'll share the most bullish ones that I can see as well. So 5 waves up, 3 waves, overlapping structures to the downside. So again, you have yourself here a very corrective move to the downside. And we see a very interesting structured move to the upside at the moment. So let's go ahead and zoom in on that right here. Now, why do I say interesting? Well, the interesting part of this is we kind of see explosive moves to the upside, but they aren't yet telling us that we are to expect significant surges to the upside. As in, these little impulsive movements, they can still be explained through corrective structures. Okay, so if we take a look at that, pull it over with the fib charts here, you can see that we've come up to the typical range of expectation just briefly here. And we've also had a bit of a dump in the market on the 4th of November before we got into the election, where we can actually now see that this area is immensely interesting for Rune. And it's interesting because this move to the downside is considered a irregular flat correction. So let me show you that. Right, you'd have A, B going up higher than origin and C coming down here. This expands out like a megaphone pattern like this, but it is complete. Okay, so this move on the 4th of November basically tells us that it is complete. That means that this corrective structure could be a couple of different things. It could be a wave 4, which actually would tie in with this being a wave 3, big wave 4, this being a final 5th wave move to the upside, and we complete out some kind of zigzag pattern. Or alternatively, this kind of irregular flat correction here is a precursor to something much bigger that's about to happen. So there's not a huge amount of data on that to kind of go on, but one of the key things with Elliott wave is it doesn't really rely on a lot of those microstructures to be in place to be predictive. Because we have a complete structured move to the downside here, which I believe is the August 5th low at $2.53.8, it's very unlikely that's going to get broken. This move to the upside is very interesting, but again, it does to me look like we've actually bottomed out here with the internal structures of what's going on. So we have a W, X, Y, X, and Z structure, right? So we know that that part's complete. So on that premise, we can now be predictive over where we think our kind of conservative targets for Rune are going to be. Okay, based on all the behaviors that we see within the data, we can now be predictive by saying that there's a high probability. Let me go ahead and pull this onto the correct level, which would be 258. Sorry, 253.8, if I can talk. Okay, and our conservative targets are going to be up here in a new all-time high for Rune. That's going to be between 37.19 and 70.08. Okay, so that's going to be the conservative targets, the ones that I think are the ones that we should focus in on. Those are the ones that we're going to look for. Now, we'll talk about that kind of bullish idea. Okay, that big bullish idea comes in here. If I go into my settings and I'm going to label this up as a 1.618, this basically is $195.43.4. Okay, so 43.4 on the kind of cent side. I'm just going to pull this down so we get that onto the correct level. 43.4. Okay, so let me remove the fibs off the chart. What are we talking about here? Well, we're talking about conservatively, we have this kind of target range, right, between $37 and $70. This area would basically mark a 3-wave pattern to the upside. We have the A, the B, the C. And that's it, right? Bull market is over. Obviously, I'm drawing these lines on. Time is not being factored into this. I'm just randomly drawing it. I can't time the market using these tools. Okay, so we're not going to look at time based on where I'm putting these on the chart. We're just going to kind of say this is where the target is going to be. Okay, Now, if we get an explosive move, that explosive move would have to be a 5-wave structure. So let's assume this is a wave 1, for example. We have a wave 2. We then have a massive wave 3, higher than our targets. We pull back and then we hit $195. Well, this now changes our structure. Okay, we would expect a 3-wave correction. Maybe we come down here, something to that effect, and then have a final kind of move to the upside. Okay, now this kind of explosive move would be highly unlikely, but a possible scenario. Wave 1, wave 2, wave 3, wave 4, wave 5, right? You can see a 5-3-5-3-5 structure. I'd say it's, insanely unlikely, but it's a possible scenario. So I'm going to clean this off the chart and let me show you why I think it's a possible scenario. If we measure the distance of the previous bullish market, at least on our chart here, from the lows to the highs. Now I'm going to zoom in and make sure I get the correct wick, which I haven't, so it's that one there. And if we zoom up here, we can make sure that we get the correct wick there. Okay, so we have our kind of 0 to 1, so 32.2 cents to 21.80. We move this over to our bear market low. Okay, our bear market low being down here at 77.7. Okay, so let's see if I can get that on the nose. I'm just going to move this up to 70. In fact, I have to zoom in for this because it's not quite playing ball. So let's go ahead and do that. So let me find what I'm looking for. This one here, 77.7. So I'm just going to zoom out whilst I adjust that a little bit. There we go. Okay, so where's our bullish target ranges? Well, the ranges here, and the reason that I think that like $195 is a huge stretch target, that even if we kind of repeat the 6,500% that we saw previously, our target range is 51.28 to a high up here coming in. Let me actually just move the 1.618 this way, 137.84. Okay, so we kind of know that there's a very unlikely chance that we're going to go more than what we did in the previous bullish market based on the fact that it's going to require a significant amount more money to do so. So I think our conservative targets are the ones of focus, which basically means there's clearly something I'm missing with the 2020 to 2021 bull market, and I lean more aggressively on thinking that this is an A, B, C structure, and we should be thinking about conservative targets between $37 and $70. Now, of course, this is just my thoughts and opinions on the data in the charts as I see it, and you guys can let me know what you think in the comments down below. If you found this video useful, informative, smash the like button. If you are new to the channel, subscribe, and if you haven't done so already, guys, check that video out right there. It's not one that you want to miss.